Hi everybody, it's Nick McDonald speaking. In today's free newsletter I want to have a look at the test results which were out for the Euro stress test, which came out just last week on Friday, and have a look at why I believe the true results will really be coming out today. So first let's do a bit of a summary. These tests were run in order to test the strength of the banks in Europe and the UK in order to survive another economic downturn, much like the one we've recently had and perhaps are starting to come out of now. Now what the tests suggested was that the banks need to raise 3.5 billion euros in order to survive that kind of downturn, which on the surface, especially if you haven't been following the news and these stress tests, might seem like quite a lot. In fact, before the tests came out, there was analyst estimates done of how much they think these banks would need on the base of the stress tests. And the figure that came from the results of 3.5 billion is only around 10% of the lowest estimate provided from analysts, i.e. they were looking for around about 30 billion euros plus is what they thought would be the results. So only 7 banks failed the stress tests, and 5 of those banks were Spanish. But the real thing is that these 7 banks were already known to be in trouble. They were already talking to regulators, they were already on watch lists, they were already known to be in bad shape, and therefore they're pretty much the banks that people expected to fail the test. There was no new news, no new information came up from the tests. And what this is doing is really making people now question the validity of these tests and whether or not they were too lenient on the tests and really just a formality to show people what we already know and try and make the market feel a little bit better. So of course the real test, as always, comes when we actually see where the banks open up today. And as I speak now, it's around about 3 hours before the markets open up in Europe, and we need to be watching those banks today and seeing how they do. Now of course the euro is already open, so the euro currency is already open, and now I'm just going to go and have a look at that for a little bit of a heads up, and we'll have a look at the euro, we'll have a look at what it's doing so far today, pre-European stock market open, and what are the key levels to watch this week, and the key things to really see: is the euro going up or is the euro going down, and where, if certain levels are broken, what is likely to happen next. Okay, so starting off looking at the daily chart for euro dollar. This is in using some basic technicals and nice consistent uptrend. It's making higher highs and it's making higher lows. This is doing quite a few other things which I like as a part of my technical trading, and that is that as price is pushing on up, that the indicators MACD and RSI are converging. They're in agreement with price. They also are making higher highs. I also like that the 10, 20 and 50 period moving average are rising, and see how we're pulling back into making higher lows in that region of the 10 and 20 period moving average. That's one of the key things I look for when I'm looking to establish the strength of an uptrend. We've now pulled back into that 10 period moving average. We've now formed some green bars, and we're looking like breaking up, and we're looking like we should push on to new highs. Today, it's very early days in the markets, but today we're up slightly on the euro, which has that slight heads up. Like I said, before the banks open up, this is a good thing that the euro is up slightly. So let's have a look at this on a weekly chart, and on a weekly chart it tells a different picture. On a weekly we can see actually we are downtrending, and we are still making lower highs and we are still making lower lows. Those who follow candlestick analysis will also know that this candlestick is called a doji, and it is a potential turning point. What this really means now is that the market is going to be very bearish if it breaks last week's low, and it's going to be very bullish if it breaks last week's high. So really now this comes down to what happens next this week. As long as we stay within the range of last week, it's not telling us much. But the real key levels this week are a break up through last week's high, and let's get precise, I'll tell you the exact highs. Last week's high was 1.3027, so we want to see a break up through that, or last week's low was 1.2731, we want to see a break down through that. Now with trading, we don't have a crystal ball, and therefore people might say now to me, Nick, are you bullish or bearish? And my answer would be, I am bullish if it breaks up through last week's high, I'm bearish if it breaks down through last week's low. In the middle of that, I am neutral. Let's have a look at higher time frames and just see where this might go. So now we're going to go to a monthly chart and see if this does break up, where's it likely to go to? Now what I've done on the chart here is I've marked out major support and resistance levels. So you can see this one where we bounced off just recently, but we've had major support and resistance there in the past. So it's not a massive surprise, the turning points. Equally, I had one marked in here where there's been some major support and resistance, and at the moment we're at another one, which is this 1.3 level. It's a big number, so 1.3 thousand, and it's a big key level. If we can break up through that, we need to look at where is the next place, where are we next likely to find support and resistance. And to do that, I'm just literally drawing a line on the chart, and I'm looking for the point where there is the most touches on a horizontal line. And if you notice at this point here, we've got 1, 2, 3, 4, 5, 6, 7, a whole bunch of touches going all the way back. This is months, remember. This is going back into early 2000. All of these tests around about 1.37. So that's the kind of level where now if we can get up through this 1.3 thousand level, we look, based on the monthly chart, like we've got a pretty clean run higher. Of course, if we come down, we're going to run into some support, at a closer level around about 1.26. So we have got, that's the kind of range where I'm looking for things. I'm looking for it to break through last week's high or low, and then if we break through last week's low, I'd be looking to see what happens down around 1.26, and if we break up through last week's high, I'll be looking for the euro to rally to around about 1.37. Of course, the real test, as I say, comes today when the banks open up, when we really see how the market is reacting to that, and then we see how the euro reacts this week, and a little bit of a bigger prediction there for the months ahead based on what happens this week. Just one other thing before I go. We run a bunch of complimentary webinars at Trade with Precision, and we have just released a new batch of dates where we have 4 webinar topics specifically talking about technically how we look at the markets, how we trade certain markets, i.e. how we intraday trade on index futures, how a certain strategy we use for precision lifestyle trading, which is run by Travis McKenzie. We also show you how we trade the markets and what it really means to trade with precision. And we have another one for those who would like to learn more about trade with precision and the things that we do. So we have 4 different topics there. We have 8 different dates, and these are available at our website, tradewithprecision.com/free webinars. I'll post that link just at the bottom of this video as well, and hopefully you can join us for some of those dates that we have coming up. Happy trading, everybody. Have a wonderful week, and I look forward to speaking to you soon and hopefully see you on those webinars.